The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Hey, we're going to just scrap that because that's not going to be good for my voice. But welcome to the March 23rd terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes. So I am weathering the storm, so to speak, out there. Hey, you can always give us a call, 877-927-6648. Would love to speak with you, talk to you. You're going to hear it's really me behind this voice out here, but it's been getting worse, not better out there. So we're going to not put the same amount of energy into the voice. I'll put the same amount of energy into being able to call the markets with you in whatever charts it is that we look for. So all of that will be solid. But with regard to the larynx, the voice, it needs to settle down. It just needs a couple of days off here. So looking forward to the weekend. You can give us a call at 877-927-6648. Internationally, 727-445-1044. If you can't call, you can always send me an email, steve@tfnn.com. As long as I get those before the show ends, and I don't mean like 4 minutes before the show. I mean like you should send it in now. It would be good. Then we'll go ahead and take a look at that. And so let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 58 points at 20,719. S&P is up 6 at 2354. NDX 100 slightly red, off 1 point. NASDAQ Composite's up 10. Russell's up 12 points. So there's the big mover out there, up 0.9%. Semis are flat. New York Stock Exchange up 0.4%. Wilshire 5,000 up 0.3. The transports are up a couple of 0.2%, nearly 0.3%. Gold is back $4. Interesting. Gold's back $4. We've had the yen continue to get stronger. So that's got to make us say, something to think about. And we will. We'll go take a look at that. Leading the charge here, individual stock-wise to the upside, you've got PVC Corp. That's up nearly 9% or $8. Flexion Therapeutics up $7.50. Wow, 37%. They have solved something. Charter Communications up $4.70. Equinix up $4. Five Below is up today. That's up $4.32. Children's Place up $3.50. Leading the charts to the downside, it's Google. So we'll want to take a look at that because it's certainly one of the top weightings, top 5 weightings inside of the NDX. So up $13 or 1 0.6%. Rare, which is Ultragenyx Pharmaceuticals, up 8% or $6. Proof Point down 5%. Stamps.com is down 2 3/4%. But I certainly want to look at what you want to look at. So let's start off. The first request that came in was, could we look at the ES Mini and the NQ weekly and daily and get those TAS profiles? So let's do this here. Thanks for that request. If we take a look at this 4-panel screen out here, it's really helpful to understand what's going on. Now, left-hand panel is the ES Mini. Right-hand panel is the NQ. Lower left is the Dow Equity Futures Contract. Lower right is the Russell 2000 with a 10-minute delay on it. Now, here's what the markets have done thus far. Here's what the equity futures markets have done thus far. They've bounced up to the level that they should bounce up to in what we'll call a potential of a counter trend move of a market that may want to trade lower. We have all kinds of signals out here, you and I. We have all kinds of signals and all kinds of indices that the market has made a short-term top. That short-term top should last for a while, more than just a one-hit wonder, a one-day wonder. However, that one-day wonder specifically inside the NQ, if you want to take a look at how these profiles work, and I'm going to have to grab water from time to time here. Maybe even throw another throat lozenge in if I have to. Certainly doing a break. But I want you to take a look at the trading session from March 21st. And also look at my little box there where it says top W, CTRW, bottom W, BOTW. Remember, green lines are the weekly profile levels. Blue lines are the daily. Take a look at the weekly. On March 21st, the top of that box is 54.41. The actual high that day before the NQ went cruising down to explore the bottom of the box, it was 54.41. So the question is, are these profiles important to us? They are. And specifically inside the Qs, they found support right at the bottom of the box, all in one day. You don't see that happen too often. Not that size of move you see, but with regard to the market profile structure and exploring top to bottom from a weekly standpoint, you don't see that every day. So what we do know, what you and I know specifically with regard to the structure of that is a bullish bias structure from a weekly perspective. Why? Because the center of that box is closer to the bottom of the box. Price has found support. Now, typically, my experience in taking a look and watching these profiles like a hawk on all different time frames, you'll notice that, or I notice that when you have a market that's getting ready to turn and churn, that the price finds stability and support at the bottom of the box. And then as it bounces, right, if you find support, you're going to bounce. What you're really watching is how price reacts at that point of control, at that center of the box. So right now, this is nothing more than just a little bit of a counter trend rally. If, in fact, the NQ at the day's end closes above 53.69.60, that's going to open up the entire exploration of the top of that box as well. But right now, what it's done, it's found resistance where it should. I'm not so worried about the intercession. I'm more just interested in the body of the candle than I am with regard to, the exploration of the top and the bottom, the intraday emotion inside there. So with regard to asking about looking at these levels here in the NQ, the key here is that if we see a close below the bottom. And here's what really needs to occur in order for the market to take its next leg to the downside. It must see a close below 53.33.90. Not a poke below it, but an actual close below it. So that's a very important level for you to be watching if you are trading the NQ. If you just want to understand what the market is doing out here. Now, inside the ES Mini out here, we can see where the daily and weekly profiles are. Same kind of thing, not exactly as the NQ did on that March 2 days ago, but what price did do yesterday and really the day before was came back and tested support. Now this has the same structure with regard to that weekly profile out here, and what we've seen price do is get up. It's been up to a high of 23.56. The center line is 23.52 out there, and so far that's acted as resistance. If price gets above, now in the ES Mini, it's a little bit different. The setup is a little bit different. It not only would need to close above that center of the box, 23.52, it really would need to get back inside 23.62 to then say, shoot, this is potentially more than a counter trend rally that is occurring out here. So that's the ES Mini. That's the NQ out here. Inside the Dow, you can see what that's done. Really the same thing. Test the center line, the center of the box on the weekly. And in the case of the Russell 2000, it's just trying to get back inside any box that it can, that being the daily. So that's what's going on with the equity futures markets. These are the levels that you want to watch. By the way, 2336.75 inside the ES Mini. 25.11 inside of the Dow equity futures contracts. Now, if price is able to overtake that line, what we're also then going to see is we're going to see the advanced decline data poke its head, its oscillator, through its zero line. We don't have that right now. But this is an end of day reading. So we really won't know till 4 o'clock on the dot. Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to that break, we were taking a look at the advanced decline oscillator readings for the NYSE. That's the left-hand panel. NASDAQ Composite just next to that. The Dow to the right of that, and then the very last one on the right side is the S&P 500. The S&P 500, we take a look at it in relationship to the volatility index, the spot volatility index, and where price is in relationship to its 50-day exponential moving average. Price is below the 50-day. Tells you you've got plenty of liquidity, and the market is in the hands of the bulls. Now, we have a unanimous vote right now that says that the market is in the hands of the bears. Then the New York Stock Exchange still down below the zero line, just by the hair on its chinny chin chin. Same thing in the NASDAQ Composite, more than a hair on its chinny chin chin. Same thing on the Dow, and the same thing with regard to the volatility index. It's trading out at 1277. 1191 is the 50-day exponential moving average. So what the market is communicating to you and I right now is it is the sellers that are in control of the market. It makes no matter that the price is up, that the Dow is up 42 or the S&P is up 3. This is the message of the markets. Now, those oscillator readings really they give you a guideline during the day, to let you know what's going on, but it's really an end-of-day tool. Just as with the volatility index, end-of-day tool with regard to the 50-day exponential moving average. If I take a look at what's going on here inside the ES Mini on a 30-minute basis, the request was to take a look at daily and weekly out here. What the ES Mini did was either got to wave number 7, that's G, or it could have been wave number 1. And I don't know which it is right now. And I don't think either do you, or whoever the you is that's out there. Utes, the Utes from my cousin Vinny. And the reason why we don't know as a group is because if you take a look at the bottom panel, that price oscillator, when it's above zero and falling, which it is right now because price is just slightly below Stevie's red line out here, it just means that a retracement is what's going on right now. It's not until that price oscillator gets below the zero line, just come back to the last time we saw the market get crushed and move lower. You can see it all down below the zero line, all below Stevie's red line. You've got a falling price oscillator below zero. There's only one outcome, and that's that price is going to go lower out here. That's how you can utilize this tool. Well, I don't really know if we've got an A to B equals CD to the upside. It's possible. That would measure here inside of the ES Mini as an example. That price projection would take you up to, now you hit the 1-to-1, but the way that this formed out here, they would not be done. That would not be a completed A to B equals CD pattern. Not the way that I would teach you. That doesn't mean, and I would teach you the right way to do it too. But so game is open for a higher price out here, and it's you have to open your open your mind up to that potential right now because of the mere fact that this price oscillator is still above zero. So just a retracement mode. We've seen it reject at this stage here at 1:21 in the afternoon, reject the top of its 30-minute TAS market profile. So that could be a support level out here. So the ES Mini has not given it up the way that one might like to see it given up if you're short the market. So just pay close attention to that. If we go take a look at the NQ, see what it's doing on that same time frame, same deal out here, still above zero. Just been a sideways move inside the NQ, so it really hasn't tipped its hat to us. That seventh wave move maybe has tipped the cards just a bit, but the NQ really hasn't. So don't get too overly excited in the NQ. You know what you want to see. You want to see that price oscillation reading get down below that zero line. If we look at the Dow, which is up 43 points, that is also above zero right now. 1189 is the reading on here. So, is the market just waiting to find out what the House does with the legislation on the health bill, or maybe it's not such a health bill out there, but whatever they're going to do, and then the market's going to make it sick. I'll tell you right now, with regard to daily charts tells sellers are absolutely in control. We've seen price move up to a level where it should have been rejected, the center of those boxes. So longer term using daily charts out here, the message is very, very clear. The intraday charts, though, when I say intraday, I'm using the 30-minute chart out there, really isn't, is kind of waffling back and forth out here. And inside of the Russell 2000, it doesn't have really a topping signal yet in play. Price is coming back and testing Stevie's red line, meaning that price oscillator is still above zero and rising, and that is in the supposedly weak indice out there. Okay, so hopefully that helps each of you out with regard to what the markets are doing or not. Now, here's the other real problem with regard to the market making a significant top out here, is that with regard to the volatility index, this chart here that you and I are looking at, you're going to see the S&P 500 up at the top of my screen, and then down below it you're going to see several different volatility index futures contracts. So what you do, didn't mean to have that go off like that. When we take a look at the top that was formed back here in August 2016, August 23rd, 2016, the difference between the ratio difference between what the spot index was doing and its furthest out futures contract, which at that time was April, got up into the 79%. I like to see about 80%, but 79 is close enough to me. 78 would be close enough to me as well. When you see that price difference, right? Because everybody talks about a low volatility index. When you see a price difference, a spread like that, that is a signal that, okay, the market has topped. If we take a look at where we're at right now, and where we're at right now is that November is the furthest out futures contract. I think, unless did December go live just yet? Let me see here. Let me do this just to make sure. Oops, didn't mean to do that really, but I meant to copy that. Can I copy that? Paste that? There we go. Okay. Let me just take a quick look, because maybe it did. And then we want to go ahead and test that out. No, it hasn't yet. Okay. So, and if we take a look at, so now you're looking at the bottom panel of my screen out here. And this is, it's a little perplexing. Actually, what the signal is, it's really not a major market top that we've got, going on inside the marketplace out here. The highest ratio difference, right, so far that we've seen between the spot fix and the furthest out contract is 64%. That's not close to 80. 76 maybe cuts it, 79 cuts it, but 64% doesn't cut it. And that took place a couple of days. March 3rd is when that took place out here. So you can see right now the spot volatility index is at 1257. And the November is at 1776. Hey, I like that. But it's only a 40% spread. That's no big deal. Really, it's just simply no big deal out here. Okay, so enough about the volatility index. How about Goldilocks? Let's come back here. Gold is back $4. What gold and silver? Here is the Stevie bottom line on gold and silver out here. Everything's okay until, or should, unless. How about everything is okay unless we see gold or silver or both close below Stevie's red line out here. So we'll blow this chart up on my screen. And the red line number inside of the current gold contract is 1233.90. Inside of silver out here is 1748. Now these numbers are going to change just slightly, probably just by pennies, by cents out there. So just figure 1233. And if gold closes below that, that's a problem, because you're going to have its price oscillator below zero and maybe falling. And let's go look at the yen, see if we can figure out something that maybe Stevie missed. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got some great doctors and nurses inside the Tiger community out here. I've got some emails. And then Duff inside the den just says, Steve, zinc lozenges help me when I get a cold. So, Duffy, you'll like this here. This comes from Well, it doesn't have an actual name on it, but it says how to kill a cold. So number one, buy zinc lozenges, cold ease or generic equivalent. Well, if you're watching on Tiger TV, you can see that's what I'm holding up. So I've got that box. I've done that. Suck on the lozenge until gone. Don't crush it up. I have been doing that. Not exactly the best flavor. I got something called cherry. I don't think it's really cherry out there, but nonetheless, I've got them. I'm doing it. Number 3, do not drink anything for 30 minutes. I pretty much do that. I don't know if I've timed it for 30, but pretty much I recognize that what's in there is supposed to be soothing the throat. And that allows the zinc to kill the crud in your throat. Yeah, crud is, and it says this is key. So I've been doing that. Plus, I've been taking zinc. I got these zinc pills. I got more zinc coming in and out of me than anything else. I've used some of that Mucinex too, as well. It's very strange for me to get a cold that lasts for more than a few hours out here. So this one is a doozy, and it says take 4 or 5 lozenges per day of these coldies things. I've pretty much done that, so I'm doing everything I can. But the body is saying, hey, take a rest, buddy. So that's what we'll do. We were talking about gold earlier, and it is unusual. We talked about it yesterday, and I kind of said, hey, let's not worry too much about it. That being the fact that we've seen the Japanese yen. We'll take a look at it right now. Bust through key levels of support. That should really bode well for gold, silver, for the mining equities out there. And the key is 111.67. The key is tomorrow 111.67 because that's a weekly profile out here. And really the Japanese yen ought to be headed down to the 108, 106, 104 type area out here. Either one of those. 108, which is the 118 to B equals CD. That should not be the stopping point. So that says to us that really gold and silver and the mining equities should take off. Now, we gave you the numbers on gold and silver that you absolutely want to see price holding above. You see, it works the same way, whether it's a 10-minute chart, 30-minute chart, daily chart out there. And again, what we were taking a look at here is if gold closes below the levels that I gave you, again, those numbers are going to change slightly, during the hours ahead. 1233, you'd get this price oscillator here below zero. And you can see, last time we had it really below zero, taking us back into the September 2016 time frame. That spelled curtains for gold. Continue moving down for several months out there. Same thing with regard to silver. So it's at this tug of war line. Everything looks good so far. So there's nothing to worry about. But you want to watch this like a hawk, because if it fails, and even if the yen is getting stronger, which it is, it says there's problems. And so I want you to be able to take action. Because I know how many people here are trading these equities or trading the actual metals out here, and I want you to be able to take appropriate action. And if things change or turn, then you take the appropriate action again. And with regard to, so what is it that I missed out here? This is what I think I may have missed, or not that I've missed, but I want to pay attention to. And it is you and I we like to look at divergent patterns. Well, I like to, and I assume if you're listening to the show, you like to as well out here. So I've gone back. This is a continuous contract for gold on the top, and it's a continuous contract for yen futures on the bottom. That's, we don't need to look at the current contracts out here for this piece of it. We wanted to go have more data, as much data as we can. We can see certainly the symmetry with regard to direction between these two. So it really helps us to understand that one is driving the other out here. Now, the interesting thing that I have found is that when there's a divergence between gold and the yen up at highs, up at the tops, it's gold that is the one that is communicating to us the eventual direction. Sorry. I got to take a sip. Those are the white lines. So hopefully you watch this on Tiger TV. You're looking at the white lines up at tops. Look at when we have gold making lower highs. And look at when we have the yen making higher highs or making double topish type patterns out here. And what we can see is that it is gold that is communicating the message to us as to which way it's going to resolve itself. Gold is the stronger one up at tops. That's why we take a look at Stevie's red line now and we say, hey, This cannot be violated. We cannot see a close below that. Maybe you can, and I'm not talking just a slight close, okay? A buck or two, come on. But if we see any significant close below that, and we start to see that it just continues to move down, inch by inch, centimeter by centimeter, don't get too hung up into, hey, how about that yen correlation out here? Because I think the bigger picture is what it is that we've seen take place over time. And when you say time, how much time? I'm going back to 2011. Right? So you and I have got 6 years worth of data to make sure that we pay attention to what's going on. Now, at the bottom's the interesting thing here, which I've been able to spot, is it is the yen that is the one that is telling the picture out here. So when gold is moving lower, just as it did back here in May of 2013, May through July 2013, where the yen was making higher lows out here, it was the yen that was telling us the eventual direction of gold. Same thing that took place recently at the major bottom back in 2015. We saw the yen make a rising bottoms pattern. We saw gold making a lower low pattern out here. It was the yen that actually won. So where are we at right now? Just take a look at those yellow lines. Just a caution. It does not tell us, like I say, until the key levels are violated, which they have not been at this stage here. It's not this can resolve itself. It can resolve itself by gold moving higher, taking out the previous swing point, just as the yen has done. Yen futures have done at this stage. So pay attention. So I think the thing that's most important. I think that, somebody always, every now and then somebody asks me, what's the most important aspect about trading and investing? And each of you may have an answer. The answer that always pops in my head is to admit when you're wrong as early as you can. If you can do that, you'll make a fortune out there, right? So at this stage here, it's always going back and saying to yourself, so what did I miss, or what needs to happen in order to be able to change your view and be able to do it and take action and do it in a heartbeat? Because you can always get back in on the trade if all of a sudden things turn around and go the other way, whichever way it is, long or short for you. So that is gold. Really, that takes care of the mining equities and things of that sort as well out there. So hopefully that helps everyone out. So what else do we want? I don't see any emails out here from folks. So let's go take a look at individual. Let's go look at Google, right? Google, one of the top 5 holdings inside of the NDX 100. Let's go see what it's doing, because it's down pretty good with volume behind it, 2.5 million shares out here. And the key level to be watching them and saying inside of Google is going to be 809.41. 809.41, bottom of its daily profile. You can see that profile has a bullish bias. So if you see Google close below 809.41, my goodness, what does that do? What does that do? It could easily set up a run all the way down to the November levels, November 14th, in the 736 type area. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and thanks to all the medical assistance that I'm getting out here. This is a wonderful thing, and of course we got to pass this along. So this is coming from a pharmacist out here, so they know their stuff. So the suggestion here is ditch the coldies. I think now that wasn't really said, but said really that what works best is Zicam nasal swabs. So really next time whoever you are out there, come down with, feel like you're coming down with a cold, make sure that you go out and get those. In fact, what you ought to do, I think, I'm going to do this next time I'm walking through the grocery store, where they have this stuff. I'm just going to grab them, pick them up, and that way I've got them for next time. I do not get colds very often, although I have lately over the last year, which is odd, but they are no fun. Man, they are no fun. In any event, out here, so thanks for all the help and all the advice out there. That is good. Yes, this group knows, N-O-Z-E, a lot. No question about it. That's a good thing. So I don't know. What do you guys gals want to take a look at next? To beat a dead horse, so to speak. We've got to figure out where that one came from, too. Right? Sometimes we use these expressions. I don't have a clue where some of them come from, let alone what they might mean. Well, we think we know what they mean, but in any event out here. So Google doesn't look good. Let's take a look at a couple others inside the GPL. Okay, let's go take a look at the Great Panther Gold GPL and see what it is doing out here. And this has had one heck of a move off of the bottom out here in the dollar range. That was back in November. Went all the way up to 230. Yeah, a heck of a move. I was in on some of the Great Panther move, but not enough. Great Panther, it's got one of the cooler charts out here. It says eventually Great Panther. What the heck happened to this? That's really weird. Some reverse splits. Okay. Well, here's really the target. Maybe in any event, it's got volume up at the highs from back in March of 2011. And it did not cover oil, so we'll do that. The low of which is 355, the high of which is 504. So Great Panther Gold, longer term, wants to get back up into that area. What it does in that area, I don't know. There was 112 million shares on a monthly basis. Weekly's got a high volume high. Daily, it's a very cool looking longer term chart out here. Now, what's it doing now, though? That's really what the question is, right? And what it's doing now is not necessarily a good thing. What do I mean by that? Yesterday, closed below its TAS profile out here, low, which is 169. You're trading 164. Not the end of the world, but it's really broken through a key level of support. See how that, let me turn price off for you. It makes it easier for you to actually see out here. And this is where these profiles are really cool. They're, again, the structure of this daily box. Weekly box was evenly distributed, so told you nobody was in control of the price range from 198 to 174. But the daily's not the case. That's not the case. Daily. Now, this daily box that formed out here back on, it looks like on March the 10th, formed below the prior one. That's never a good scene. And the structure of this is bullish, meaning that center of the box closer to the bottom. So really, buyers should have been able to control this price area in the 169. They haven't. So what does that mean? Well, it means a couple things. Could be an A to B equals CD to the downside. The volume here on March 10th was 2.2 million shares. You're already at 1.5 million shares. So it has the volume. If it closes below 166, easily could be qualifies as an A to B equals CD pattern inside a Great Panther silver out here. High Ho silver. That takes you all the way back into the November level, $1.34, $1.17. So what do? If you're inside this equity out here, you just make sure that you have stops in place. That's all that you really can do. And if you're long this thing, just pray that it gets above the $1.69 level, back above an area of support. It's 146. I don't know what the total volume is going to be, but today, if it is more than 2.2 million shares at the end of the day, and I hate saying that, you've got a confirmed A to B equals CD to the downside, so that would be a scorcher. So let's go back and take a look at oil. So Duffy wants to look at oil. Light sweet crudes back 17 pennies, basically 47.86. And if we look at this, let me also go grab another chart out here. Well, I've got to switch pages. Give me a moment to do that as well. So this will help us. Should help us. Let me open this up. Let me go find the current contract for light sweet crude. May, okay. All right, so as we're taking a look at light sweet crude out here, Gator, we can see that it completed the 1 to 1.618 A to B equals CD when it get down to the 47 level. Yesterday's low was 47.01. 47.07 was the exact 1 to 1.618 A to B equals CD. But here's the problem. Now, you don't have any type of bullish reversal. Price today came up, tested the profile. In fact, let's turn this off, right? If you just look at it, if you believe that the information I'm sharing with you, first, it makes sense. Yeah, you see it. So you see it and you say, okay, I believe it because I just see it. This is not just something that Steve makes up out here. Take a look at that daily box, right? So when you look at that, Gator, that's a bullish structure or a bearish structure? It's a bullish structure, right? So it's a bullish structure out here, and that says that the buyers should have been able to have held the 48.37 level, and they didn't. So when a bullish bias box appears and it fails, it's not a good thing. So we turn price back on. Forget the A to B equals CD pattern. Just simply, today was a test and a rejection. Something that was support now has turned into resistance. That price level of 48.37, not by a mile, but enough to say, hey, guess what? I'm going to go test out the swing point. Now, that happened yesterday, right? So the November 14th swing point is what we're taking a look at. The top is that high was 47.13. And yesterday's low, we said, got down to 47.07. So it was a test and a rejection out there. I don't have the volume of what was out at that swing point November 14th. But what we can use, what is it, USO or something? I think is it USO is the would that give us the so the volume down there on November 14th was 44 million shares, and yesterday you were coming down with 22. So we do know there was a test and a rejection on light volume. All right, if we just simply utilize that versus the actual contract. Now let's go back to the actual current contract out here. So you're coming down to a swing point. You're doing light volume. Yesterday was rejection of it, but rejection of what? Rejection of that swing point. Now it's rejecting the daily box out here. So I don't know if you're in it or you're looking to get in it right now. If you were long, well, then your stop has got to be under 45.78. It's got to be underneath that swing point. And if you're long, hopefully you just took that position today or yesterday, and you can say, I think I'm going to go ahead and get out. I'm just going to wait for this thing to prove itself. Proving itself says you get back above 48.37. that really 48.76. You want to see this thing get back inside the weekly profile out here. Otherwise, the likely potential buy becomes 45.78, maybe potential buy, and that's that swing point from November 14th, because there's nothing that says that it can't move lower out here. The other swings that it's going to deal with potentially are back in August of 2016. That's the last time that we see any type of bullish reversal signal. We did see a bullish reversal signal here, a little morning star pattern. That was between the 11th, the 14th, and the 15th out here. There should be good support. That support is at like 45.78. That is light sweet crude. Texas tea. Dow's up 62, S&P's up 5. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So you got the Dow up 63, S&P is up 5, NDX is back 2 points out there. So we'll see how the market, I suppose, responds once the vote is taken. Ideally, though, the vote will be taken after the market closes. Then we can watch the futures contracts out there. So I don't know what else to really share with you. I don't see any other requests inside the den, and nothing by email out here. We looked at Google. I said we were going to go look at some of the other. That's right. I said let's go take a look at some of the other holdings inside the NDX 100. So there we'd be looking at Apple, Microsoft, Amazon, Facebook, and Google being the top 5. So in the case of Apple, We looked at that yesterday. It formed a topping pattern a couple days ago. Sorry. Hard to make it for the full hour. It did that by forming a TD sequential count out here back on March the 21st. So it's given us a price also moved higher, did it with less relative energy. Price target on a pullback in Apple's around the 133 area. Next up is going to be Microsoft. Let's go take a look at Microsoft, see if there's any topping pattern in play out here. And the answer is no, just really sideways action. Nothing of substantial significance. Now, it does show that it's really a struggle to get up over the 65 area out here. But this is just a real tight trading range out here. So in the case of Microsoft, no big deal. Amazon, let's go take a look at Amazon, AMZN out here. The throat is fading quick. So here's what Amazon did a couple days ago, just like Apple. Gave you a nice topping pattern. Prices moving higher, doing less relative energy. Big old key reversal session. Now, there's been a key reversal on an outside day. Excuse me. Is that key reversal, which has more importance, comes in an extended move. And this is an extended move inside of Amazon. So you've got price below my red line, 857.74, price relative strength divergent pattern. I'm not sure what wave we have. We don't even have to worry about the wave counts at this stage. So what Amazon should do is pull back into the 818 area. And below 818, then that becomes a problem for it, because then you're looking at 757. I'm not forecasting that, but those would be the levels that you'd be watching. So the 820 type area-ish is in play. That's on, so you've got Apple's got a top, Amazon's got a top. Let's go take a look at Facebook out here, FB, see what it's doing. Oh, it too. So it too has the same type of top, right? It's got one of those nice price relative strength divergent patterns, price below. Now, in the case of Facebook, excuse me, the first level of support's only down a couple bucks, 137.01. So if Facebook breaks below that, that would be telling us something. So watch it's right around 130. It's 137 and change out here. I don't know the exact number. Well, I can tell you the exact number. Why not? 137.40 is the exact number to be watching inside of Facebook. So 3 of the top 5. And in the case of Google, I don't think we checked it out on this one, did we? Let's go do that now. Whoops, I got to put in the right symbol. Otherwise, I get a blank screen, which doesn't help you. Yeah, in the case of Google, same kind of thing. Yeah, well, Google's got a problem. Google's headed back into the 795 area. So you got 4 of the top 5 inside the NDX 100 that are saying time for a rest, just like me. So I won't be here with you tomorrow. I've got to take a rest and so forth. But stay tuned, because I think our favorite polar bear, he's up next. And then you got the Tom O'Brien Show, 3 to 5. Andy Heck from 5 to 6. Have a great weekend, folks, and I'll see you be 100% healthy, I hope, on Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.